All right, gang. So in this class, we're going to cover Fibonacci analysis. So I'm going to teach you guys about this Fibonacci magic. As you guys know, that I like to use the Fibonacci for support and resistance. So this is one of the indicators that we use for support and resistance. And I also like to use it for exiting with profits. So profit taking as well. Now, the Fibonacci itself, it occurs, naturally in the world, in the human body. It's like all over. So it's one of those supernatural sequence of numbers. As my wife says, it gets a little woo-woo. But we're going to save you for the woo-woo. And what I'll do is I include a video link so you can check it out if you're into the woo-woo stuff, which is the supernatural type of phenomena that are related to the Fibonacci. But what's important is that the Fibonacci works in the trading world. And that's what's important. So I'm going to teach you guys how all of this, works. We're going to go over, what the Fibonacci sequence are and the ratios and, how and why they work, with trading. So taking a look here at my Excel document, you guys don't have to worry about calculating any kind of math because the platform is going to do it for us. But I want you to just understand and see how the stuff works. So if you take a look here at this column, I have the Fibonacci sequence. And the sequence begins with a 0 and a 1, okay? So you start with a 0 and a 1. So you're basically counting from the smallest number to the higher number, right? So 0 to 1. And then how do we find out what the next number is? Well, we just add these two numbers together. So you add these two numbers together, and then you'll get the next sequence, the next number in the sequence. And then you continue to do that into infinity. So we just add in the two previous numbers to get, the number that we're looking for. As you see, I go down a list. This is how it works. Now, that's the Fibonacci sequence. Now, the Fibonacci sequence, again, was discovered by Leonardo da Pisa, also known as Fibonacci, Leonardo Fibonacci. And I believe he was taught this by the Indians, okay? And he found that this stuff occurs, the Fibonacci sequence itself occurs in like pretty much everything in the world. In the universe and everything, right? So anyhow, what's important that we're looking for is not actually the sequence, the numbers, but the ratios. So we take a look at the ratios right here. How do we get the ratio? Is that we are dividing, starting at once we get to 233. Okay, once we get to 233, right here on the sequence, we're going to take these numbers and divide them. If I go up one, right? If I go back to the 144, what we do is divide the number before. So we divide the number before by the 233, okay? And then that's how you get a ratio, and that's a 618 ratio, 61.8 ratio. 618 ratio is like the most important ratio. We'll go over that here in a second, but just take a look here at the rest of the sequences. We're deriving these ratios by dividing the numbers by that 233. And once we get, say we can even go higher. And we just take the higher number and still divide it by the 233. And that's how we're coming up with these ratios. Now the ratios is really going to help us with our trading. So that's why I'm showing you this. Now the 618 ratio is the most important one. It is known as phi, which is PHI. And also the golden ratio. It has lots of names, like the golden divinity, right? Because it is like one of those, again, supernatural numbers. But the golden ratio is what's important, okay? So the golden ratio, as you guys can see, all we're doing is just dividing the number, by the number that's ahead of it. So if you can see it here, as I go down the list, say the 34 to 55. I'm dividing the 55, right, the highest number, by the lower number, which is 34. And we end up with the 1.618, okay? And you can continue down into infinity, and you will get this 1.618 ratio, the golden ratio. Now, it doesn't occur until we get to, number 34. So these numbers here are really not that significant. So what I can do is just delete that, all right? And even here, we can delete these ratios because they're not significant, okay? All right. There are significant ratios, and we're going to go over here in a second, those ratios and why we use them. But another cool thing here is that with the golden ratio, you have a 1.618, and then there is a 6.1 61.8. The key thing is the 618. So whether it's a 1 or a 2, it could be a 3, it could be any of those numbers in front of it. The 618 is what's important. So that is the golden ratio. Now, if you take a look here, that, these numbers in the sequence, the distance between these numbers are actually the 1.618. Okay? How do we know that? So if we go over here, so if we want to know what number comes after 55, well, we just multiply this number by the golden ratio. So we multiply by the golden ratio, and then we end up with 55. See? This is the math here. And that's the following number in the sequence, which I have highlighted here. So anyway, that's the importance of that. This golden ratio is really significant, okay? So we don't play around with this golden ratio. It's all in here. Now, what we're doing for trading, we have key ratios that we are actually using to make our analysis. So we had the 23.6 ratio, the 38.2 ratio, the 50%, the 61.8%, 78.6, 127.2, and a 161.8. Now over here, I got some color codes here. So when we do our custom build out here, if you want to, take a snapshot of that, you can. When we do our custom build out in the Thinkorswim platform, we're going to use those color codes to correlate with these ratios. But these ratios here are significant in trading. All right. These are the ones that my teacher, who's one of the best Fibonacci masters in the world, and I learned from her, and she's, super awesome. But these are the levels that she taught us, and they work. Okay. They work like clockwork. So if you take a look at how we get to 23.6, okay, we're just basically look over here. You see the 618, which is the golden ratio, and we're subtracting 38.2 ratio, and that's how we get to 23.6. 38.2, we're taking 100% and subtracting the golden ratio, and that's how we get that. 50%, we're just taking the 100% dividing by 2. You get 50%. Golden ratio, as we went over earlier, 233 divided by the 144. 786 is the square root of the golden ratio. The 127.2 is the square root of 161.8, which is a growth of the 618. It's basically reciprocal there. And the 1618, as we have here, we took the golden ratio and we just grew the number, you can see the formula here in Excel. The math here, you guys, again, don't have to worry about it. So if you're feeling a little confused right now, don't worry about it. I just want to show you on a molecular level that this is how it works. What's important is that you need to see and know how to use these things, which that's what we're going to get into now. Okay, so these are the ratios. This is the math. This is how we come up with it, just in case you want to be a genius. It's not necessarily for me to even give you guys this handout here to work with it in Excel, because that's not important. Okay. But this is how we come up with it. So I'm going to move this to the side and we're going to get to work. All right. So I'm going to show you guys here the Fibonacci retracements, the Fibonacci extensions, and the Fibonacci projections, and how we're going to use those tools. So you're looking into the Thinkorswim platform. On the charts tab, we have our drawings. So at the top of the chart, there's a drawing tab here. And at the bottom of the chart, there's a little icon that's here. And I like to use the one that's on the bottom. You can use either one. It's your preference. But for me, I've been doing this for so many years, I'm just constantly using the one at the bottom, right here in this little square. So I click on this little square, and then you'll get, these indicators that'll show up. These are all drawing tools. And what we want to do is we want to draw our Fibonacci. And so if you go down here, you'll see we have Fibonacci retracements. And then next to it, we have Fibonacci extensions. There's a whole lot of other more, Fibonacci's here, but we're not going to get into those because they're not important right now. We got Fibonacci time series, time ratios, time extensions, and arcs. So yeah, you can use Fibonacci with time. It is a little more abstract and a more difficult task to do. We're dealing with Fibonacci with price, okay? So we're looking at price projections, price extensions, and price retracements. So these two are the ones that we're going to use. So what I want to do is click on the retracements, okay? And what we're going to do is we're going to build a custom build out first, and then I'm going to show you guys really how to use it. But basically, you just take like the highest point on the chart to the lowest point on the chart. in the most recent swing. And then you'll get a Fibonacci drawing that will appear like this for you. Now we want to customize this here. So to customize, we're going to right click. We're going to hit edit. And when you get in here, you're going to get the custom layout right here in front of you. Okay. And there are a lot of coefficients that's in here. But what we want to do is to customize these coefficients. So you look down here. And for one, I want to remove the 0. We don't need to use a 0. The 236, you want to keep that. The 382, we want to keep that. The 0.5 is the 50%. We can keep that on there. Sometimes I take it off. And we'll leave it on here for the demonstration. The 618, the 786. And the next one is we have the 1 right here. But I actually don't use that. I actually use, because we can see the 100% retracement. But the key thing that I want to use is the 1.272. But what I'll do is we'll keep the 1 in here. And what I'll do is I'll just put that in this dialog. Let me see if I can copy that. Okay, here we go. In this queue, we'll put the 1.272. Then we'll put the 1.618 in this next one. And then we'll do the 2.618 in this next one. So these are the ones that we want to use. But for this here, this 2.618, we don't need it. So we're going to take that off right now. Okay. But we want to keep it armed just in case we decide that, we need some further extensions to look at. Okay. Now to some of the customization, we're going to go into the colors. And you want to go to more. And then you go to RGB. And if you see any of the codes that we had here, which I'm going to show you here in a second. All right. You could just copy and paste some of the codes. Let me see if I can get them. If you have them copy and pasted in here. So it's actually not allowing me to do that. That's interesting. 574D83. It's going to be the first color. Okay. And then the 382, we want the same color. So you just go in there and you do the same thing. Type it in. The number is 574D83. And you can use any color that you choose, but these are the ones that I use. Okay. Then we go to the next color, RGB. And we're going to do 1, 2, 3, 4 zeros, and FF. And in the 618, sometimes I switch this over and I use like a gold color, but for the most part, I use the pink color. Okay. And it's FF33CC. Okay. 786. We want to go with this color here. 574D83. And the 1, I'm going to leave that black, but the 1.272, we want to go with 66CC00. All right. We'll do the same thing at this target. All right. 66CC00. All right. And here at the top, well, if you look down here at the bottom, the color black, I like to leave that black. The style, I leave that dotted and leave that at 1. Now, one of the things that I do like to do is take the 618 and, in fact, actually go to the 236 because I like to have these dotted because these levels are not that significant. So I like to keep them dotted. And I'll go here to the 382 and keep them dotted. Okay. And then for the 50, I'm going to keep that dotted as well. I'll take this one, put the dots on there whenever I use it. The 618, we want to keep that a straight line. But what I want to do is make it thicker. I want to make it a thicker line. So I'm going to make it the number 2. So it stands out more, okay? 786, I just keep that, flushed across, with the number at the width of 1. And the same thing for the 100, which is the 1. Keep all that the same. But the green targets, these are significant. So we keep those lined, and we want to make those thicker. I make those at a 2. All right. And this is the retracement Fibonacci tool configuration here. Now, what I also like to do is you want to make sure that the left extension is off because you don't want anything to be extended there. But you do want to make sure that the right extension is on because it's going to give us levels in the future that we can actually use. And then to show coefficients, I like to keep this on the right side of the chart. And to show price also on the right side of the chart. So it's going to give us our retracement levels and the price levels all at the same time. And you can name this, okay? Put in Fibonacci retracements. And then you can actually save this as default right here at the bottom here. So I like to save it as default. Okay, and then I hit OK. And then you have a chart that looks like this. This is our Fibonacci retracement. Okay. All right, so this is the Fibonacci retracement. Now, before we use this, I want to build one more. Let's build our Fibonacci extension. We're going to go here. We're going to hit Fibonacci extension. And now that we have the extension armed, this is a tool that you'll use 3 points on. So we just want to take 3 points. I'll take this low to this high to this low, and bingo. The chart will appear. The tool, the indicator itself will appear. You just want to right click it, edit properties. And what we want to do is basically take, remove every coefficient except for 1. Okay. And sometimes you can use the 618, but I just like to use just the 1. And then we're going to take this and we're going to make it red, stand out. Okay. And you can name this Fibonacci extension right here at the top. The coefficients, I like to keep everything the same, all on the right side. Show price, all on the right side. Extension is on. Hit OK. All right. So now we have our extension tool on. And it's red right here. You can see it. Okay. So let's go remove those. We have our extension and we have our retracement tool here. Armed. And what I'm going to do is I'm going to delete this because one of the major things that most people, when they're trying to study Fibonacci, is they want to know how to use it, on a chart. So for one, you don't want to use this work on penny stocks. Again, penny stocks, they're just, pump and dumps, it's nothing really significant there. The Fibonacci is really going to highlight, price patterns. And, we're looking for price patterns. And we can do that, better on blue chip stocks, right? Because they have seasons and, predictable factors, right? And then the charts look a lot better, okay? You have lots of, mountain peaks and valley lows. Now, the Fibonacci it works best when you have a good chart with mountain peaks and valley lows. Good mountain peaks and valleys. It works better, under those circumstances. And it becomes a little more abstract when you don't have as much, peaks and valleys to work with. Okay. So one of the key things that you want to do is you want to find what we call swings. Okay. And keep in mind, with Fibonacci, it is a little abstract. Okay. When I first started with Fibonacci, I actually gave up. Okay. I quit using Fibonacci. I told my teacher, I was like, hey, I'm not getting it. And she was just like, hang in there. One of her students actually started showing me the work from his lens, and that's when I really got it. And so I came back to the Fibonacci because I was able to see the art within the abstract. And remember, trading is an art and a science. Okay, Fibonacci is a little, supernatural. Okay, so it's a little abstract, but with time you'll get it. Okay, but it takes practice. So you do it, run it on a couple of charts, and you'll get it. But don't give up on it. Hang in there. And test it out and then post some charts on your timeline, right? Post them on the timeline on the website, have your peers to review it, or even myself. Or, you know, if you're not comfortable with it, if you just want somebody to run something on you, just, you know, make a request and we'll do it. Okay. So what we're looking for are mountain peaks and valley lows. So what I'm going to do is I'm going to stretch my chart out a little bit so we can see if we can identify some of those swings. All right. So we can look at the high point here, and we see there's a small swing here. It's a mountain peak and a valley low. Okay. The high is high, and then we have a low here. So that's a swing. And then we have another swing that's from this high down to this low here. That is a swing. Okay, this is price swinging. This is a high here where the price came back up, and then the price came back down here. Okay, so when you're looking at the charts, that's what you're trying to identify when you first look at it. We're looking for those points. Okay, so this was what I'm using. I'm looking for those points. Also, we take a look from this low. This is a low point here. Okay, this is the lowest point right here. Okay, but we can see price, you know, action right up in here. From that swing to that, from that swing high to that low. Same thing here, high to low, high to low. All we're doing is just identifying highs to lows, mountain peaks and valley lows. And we're going to take our retracement tool, which it only connects from a point A to a point B, a high point to a low point. Okay. So I'm taking this high swing and I'm going to run it down to this low. So when I say swing high to swing low, that's what I mean. So this is what we're looking at. I got that high to that low. Okay, so this is how we use the retracement tool. And if you just look at that by itself, all right, you just look at it by itself, you can see the price behavior. Okay. Right here at the 100, we can see that the price could not clear. It got rejected up here. Okay. So that was clear, you know, resistance. Okay. When you run the Fibonacci retracement from the high to the low, you are looking for resistance up ahead. So you have to have a low and then it bounces. Okay. When it bounces, these lines are going to show us key areas of resistance up ahead that otherwise you would not be able to see. Okay. So this is what gives you an edge using the Fibonacci, because you can see levels that other people can't see, especially new people. Okay. Now, a lot of these quant traders and all these other, you know, traders here, they use the Fibonacci's with their math models. It's easy to do that. So I don't know why the price behaved towards the Fibonacci, but it does, you know, more often than it doesn't. So that is how you use it. Now, what you're looking at here, all right, you remember our retracements? We got the 23.6 right here. This is a level, but it's not a significant level. But it is a level that we pay attention to. We see the price came and bounced at this level a little bit. And then we got the 38.2, which is another level we can see in the past where price bounced off of it here, but it's not a significant level. We got the 50% level here. And again, this is not a significant level, but nonetheless is a level price held here. But a 618, the golden ratio, is a key level. So that's why it's pink. It's pink. Okay, we can see price get stalled out here. The 786 is another level, and it's not a significant level, but we can see price held here. You know, from the past, it was support, and then over here is resistance twice. Then it came back and it became support. Where's support right now? Support is at the 786. And then we have the 100%, where sometimes I don't have this on my chart because I already know that 100% is always going to be at the top of where you started at, your point A. So sometimes I include it, sometimes I don't. Even the same with the 50%. Sometimes I don't include it. But the 127.2, these are the price extensions. 1272 and the 1618. These are price extensions. These are our target points. They show you where you need to be getting out at. Okay. So that's why they're green. Greens, you know, this is special for profit taking. So this is a profit taking zone. Price comes up here to this level. I am taking off my position. It doesn't matter what's going on, but I am out of there, right? So, but if I have a bigger order, I take off, you know, maybe half of my order here, depending on how many contracts you're trading. Take off half at least so I can capture those profits right here. Now, if price, you know, normally price will bounce. Let's say if price wants to breach through this level, well, the next zone will be up here at the 1618. So I still got 50% left on, and then I'm cashing out the whole order right here at the top. But I take off about 50% right here, at least, so I can capture some of the profits. Because if price, falls all the way down, I don't want to lose those profits. I want to secure some of those profits. So we want to take some off the top. So this is the first target. Take some off the top. This is the second target. Okay. So this is you feeling real ballsy, right? Because some people get ballsy. If you're that guy, then you can, hold on here. You want to be more conservative. You want to follow the 127.2 and make sure you get out at that level. So that's what those zones are. Okay. So remember, I just told you, if you swing from high to low, this is going to uncover resistance at the top. How can we identify support? We had to swing from the low to the high for support. Now, what I would have did is I would have went in the past. If I was looking for, once the uptrend broke, we had the uptrend here, and once the uptrend broke, was interrupted, then I'll be looking for the bottom. If I was looking for the bottom, I'll just take a prior low. See these lows here, these swing lows? These are all points of connections, okay? And you can take them all and connect them to the high, this is the high point here. So if I take this high, if I take this low, swing high, it's going to uncover support. And you can see as I am, just moving it around, you can see how it snaps in place and price behave towards it. Okay, so bingo, you just drop that like that. And then we have the support. Now the chart looks a little messy. So what we want to do is clean this up a tad bit. What we want to do is take the control on your keyboard and then, left click on the mouse to remove zones. Okay, so I can take this, right click it, and that erases a zone. I don't need this one here. I'm going to remove it because the purpose of me using it in this way was just to highlight support, and we have support highlighted clearly. So all these other zones here, or these levels, I'm just going to erase them because we don't need them anymore. Okay. And the reason why you don't need them anymore is because price itself has breached those levels. We're only keeping what has not been breached. Okay. If it hasn't been breached, then we're keeping it. 618, you can keep that on there if you like. Just depends. We're just looking for how the price has behaved towards it, and that's how we know we have a significant level. The 786, I'm going to keep it here because I can clearly see where price bounced off of it. Price was resistance right here at it. And so it's a key level dealing with this chart. But the 236, I'm going to erase that. So this is how we clean up our chart. So now you have a better, much better looking chart. Now I'm going to keep the 100 up here because I can clearly see that price, is definitely behaving towards the 100. Okay. So I'm going to keep that on there for that purpose. Now, another thing that we can do is run clusters. Okay. So to run clusters is you take different swings to meet at a common low or common high to try to uncover, more significant levels. How you do this, you take those swings that we were talking about before. If you take a look at this chart, I got my low and my high, right? These are the significance. This is the significant swing. This is the major swing right here. And we had this swing. We swung from this high to this low, which is one target. And here's a high that we can take also from here, but it's the same as that high. So I'm not even going to go there with that because it's the same as that level. I don't need it. But if I take this high, okay, to this low, now I have a level, okay? And what's interesting, what I'm going to do is I'm going to remove it because I want you to see what we're looking for. What we're looking for are overlaps and the retracement levels. And if the lines overlap, then those are strong signals. So what you do is, as I bring it down, you can see how the 1272 is a strong level because it's overlapping with the 100 from the previous retracement. And then I got this 100 overlapping the other, the 786 retracement. And I got the 168 or 1618 at the top. That's highlighting over, the previous target zone as well. And so basically all I'm doing is I'm just looking for those levels that they're overlapping. And the other levels, we're going to get rid of those. Okay. Bingo. So I can just actually come down. I can remove these because they're not significant. Not for, because again, what we're doing is we're trying to find targets in the future. And so these are so far in the past, they don't really need them. Okay. So that's how you get that. So that was another swing. So that's two swings. That swing high, this swing high. And there's another swing high right here. So when the price fell down, it came back up. We swing from this high to this low. And then what we're looking for are relationships with the price. Now, I don't have anything that's overlapping, but I do have price that did behave towards these levels here on the chart. Okay, so what I can do is drop it in here. We're going to delete these down here to clean up the chart. So these levels are no longer significant. But this 786, this was a clean bounce, right? So I may decide to leave that on here because it is a key level. Obviously, price did behave towards it. Although I got the 618 here to be the next floor level if price should come down. We can see that from there as well. But then up here, you see that we have price. So it came down here as like a floor, right? And let me see. What I'm going to do is actually, because the 786 held more, because it had 2 points where it touched here. And the 127.2 right here, I'm just going to actually just remove that for now. Okay. And we're going to leave this like this because this zone here is obviously the price is chopping sideways right here at this zone. And so the key to using this anyway is to see what is up ahead as far as resistance. And so we have that right here. So this resistance all up in here, we can see that it's actually behaving towards it. And basically, we're going to use this for making trading decisions. You know, where do I get out at, right? Or where do I get in at? Where do I short at, right? We can see this swing here. You can see these swings back here, right? But these are really small swings, so they're not significant. If you take this swing like this, you can see they're so squinched in, right? And we can see that, it still works. If we swing from there, we can see that the price is, the price is touching here. But because the swing is so small, you can't really get into it. We can stretch the chart. But what I like to do is actually go into a smaller time frame. And remember, you can use the Fibonacci on any time frame. So I'm going to go on a smaller time frame so we can see what's going on with this price on a smaller scale. And what I do is go in here and remove these levels in here. These levels are insignificant. Okay. But we see how price behave towards this level here, right? It did breach here, but this is a smaller time frame. Smaller time frame. And you can day trade from this. You can, whenever you trade in smaller time frames, you can go in and use Fibonacci on these smaller time frames. It works on, pretty much every, time frame. So what you do is you'll just look for different swings in there. And let me just move the price up some. As we see that we're getting, to a top and that price is behaving. See here in the past, price behaved right here. So we know this is a key zone right here. But price could be rejecting before we even get to that zone. It could be rejecting right here at this level. And to be honest with you, what we can do is remove this because we have a more significant level in the smaller swing here that actually did really work. So we can keep that on there. Now, price hasn't breached these levels, so we're going to keep it there. Now, if price breached these levels, then all we do is remove that level because it's no longer significant. Okay, so price goes through it, just remove it. And you also want to make sure you update your charts because they don't last forever. Once price breaches through these levels, you want, constantly update these things every so often, okay? Which is normally, maybe a month or 2 months, where they're no longer valid, where you have to redraw your lines because you get new highs and new lows in there. Okay, so that's how you actually run the retracements. That's how you can actually interpret it. And if you have levels that are really far away, you can actually delete them if you want to, just to clear up some, real estate on your screen. But the next level, what I want to show you is the extension here. And the extension is this tool here. And this extension, when you use this, it uses 3 points. So it's an A, B, and a C is how you use it. And this is a projection. They call it the extension, but this is how you get some projections in here. And what you do is you could take a low. You could take a low to a high. Excuse me, let's go here. We could take a low to a high. And then we'll come back down to a low, the lower low. So you have a lower low, right? The lowest low. And then you get all these zones in here. And let's actually go in here because I thought we actually configured this into our default, but we didn't. So let's actually go do that again. We just want the 100% here. And we want to make it red, level 2. And let's save this. I thought I did, but maybe I didn't. Just save it as a default and hit OK. Bingo. All right. So there we have a level. Okay. But because price has extended beyond that level, that extension, that projection is not valid. So there's no need to leave it on. We're going to remove it. We're looking for resistance up ahead. So we're going back in the past. You can go to all these different ones from that low, that's point A to point B, down to point C, and see if you can get a ceiling up above. Price is above this here. If you can see, price is above it, so this is no longer valid. We can't use that zone. So we'll go to the next one. And we'll do the same thing until we get a valid zone. Here we go, bingo. Now look at that. It's overlapping on our other price level, okay? So we can obviously see that this is a significant level, okay? And price is trading underneath it. So we're going to drop that in there. And there we have this resistance level that you wouldn't have saw without this training. Let's dial into it just a tad bit here. You see when the price overlap, that's a cluster. The more overlaps you get in there, the stronger that signal is, okay? And if you look on this chart, you can see that the momentum, well, I haven't taught you guys that yet, but you will be learning that next. But you see the momentum is starting to die off on this thing. So that resistance is definitely holding up, okay? So that is meaningful information that we can actually get from the Fibonacci. So there you guys have it. I just taught you how to use the retracement, taught you how to use the extensions to, targets, and then a projection so that we can get some projections in here. That's up ahead. You can also use the same tool to gather support, which, our price is moving a little different here. But what you would do in this case, instead of taking the low to the high to the lowest, you would just take a high to a low to a higher point to gather that. And I can probably better demonstrate it from going back on a monthly chart where we have bigger swings. A weekly chart. Here we go. So we have a weekly chart. If I do it on the weekly chart, then we can see if we can get some support here as well. We'll take this big swing here, that high to this low, to the highest high. And, that's how you actually get, support levels. Obviously, the price breached it, so it's not significant anymore, although price did behave towards it once it bounced. But that's how you would use it. So it works differently on different charts. I mean, it works the same basically, but what I'm saying is that, when you use different charts, you're going to get different outcomes based off of the shapes of the mountain valleys and mountain peaks. So, but when you see something like this, when price breached through the level, that level is no longer valid. So we'll remove that zone because it's no longer giving us information that, we can use for high probability trading. Okay. All right. So there you go. That's the Fibonacci Magic. Now, I also use this along with the my other indicators that I was showing you as far as the moving averages and everything. So I actually do have those together. So I have it as I'm reading them. You could just go in here and turn them on and turn them off. I'm gonna just go in here and just hit show study to turn it back on so that I can see my moving averages along with my Fibonacci's. So this may be looking a little confusing for you. So, if that's the case, then you can just turn it off so you can see your Fibonacci zones.